Welcome to another video of Electric Invest. And with all uncertainty surrounding the market and the distractions regarding Elon Musk and Twitter, I thought about making some valuable content for you guys and talk about what sort of numbers we can expect from Tesla's Q1 earnings. But before we begin, I do want to say that if you find this video informative, consider subscribing to Electric Invest and hit the notification bell so you don't miss the next upload. So alright, first, we do have another record quarter in terms of deliveries. Although Wall Street consensus was 316,000 vehicles, with the recent shutdowns in Shanghai in China paired up with the supply shortages, amongst other things around the world, it made it impossible to have expectations so high, so they ended up trimming them a little bit. This made it just possible for Tesla to reflect a meet on estimates at around 310,000 vehicle deliveries. And with news about the possible reopening of the Giga Shanghai factory, some of this short-term negativity may probably start to phase out a little bit, especially starting this week. But what about the earnings reports? The earnings reports, as we already know, comes on Wednesday, April 20th. You know, 420? Haha, very, very nice, Elon. But anyway, what about those numbers? And in this video, we're going to be talking about that. So, well, right now, off the bat, I want to start with some assumptions that I have, specifically regarding the earnings per share. So, one of the things is a higher selling price, which will result in some slightly higher margins. There was also additional expenses from the last quarter that are not going to be reflected in the Q1 earnings this time. So this is going to improve the overall earnings compared to the last quarter. So with those assumptions aside, let's begin talking about some numbers. Now we could use the previous selling price from last quarter, but since the prices have increased so much, it's best to calculate the average price using 2022 data. We can break down the numbers by model as it is currently being sold and make a contrast with how much customers paid at the time of the order. Considering that Tesla's demand has pushed waiting times to an average of 6 months or more, keeping that in mind, let's look at the standard range Model 3, which currently sells for an average of $47,000 from the Fremont factory. That is a huge increase from the $39,000 that the Model 3 standard range used to cost around the time that customers first placed their orders. This is an additional $8,000 difference from those lucky ones that were able to order it back then compared to today. Now, this is only for the standard model. The Performance Model 3 only increased by around $1,000. If we use this average number between the $39,000 and the Performance price, we get an ASP or average price per unit of $45,000 for the Model 3. Using this method, we get a rounded number that makes it easier for us to use and compare rather than going on every single detail about every single model and trim level. We can just use this $45,000 ASP figure for the Model 3. Now, luckily for us, when we take a look at the Model Y, we need to look all the way back to the old price when customers first ordered the Model Y, and this would put us at around September 2021. At this time, the long-range Model Y was selling at around $53,990. This wasn't much higher than earlier in the year, since the Model Y started increasing much later during the year in 2021, roughly around November and December. And lastly, no additional increases happened for the Model S and Model X, so we don't need to estimate any differences there. Everything else is just all about the deliveries now. And right over here, I have laid out all the numbers for you, and maybe right now you guys can tell me in the comment section your opinions about it, but I'm about to break it down for you guys right now. So we can see over here an estimated almost 303 million. This is thanks to the increased production of the Model S and Model X in 2021, which, as you guys can remember, there was a temporary halt due to a refresh of the Model S and Model X earlier in 2021. But after production increased, I have an estimation of automotive revenue of $16 billion. Now, calculating the margins, it's much trickier due to the simple fact of the supply shortages and the risk of higher costs due to production during the time these cars were being built. I do want to point out that there has been occasions in which Tesla also had extra expenses just to get cars delivered across seas due to higher prices of fuel. However, if we give a healthy 30% or even a 30.5%, we can see that we would have an automotive gross profit of around 4.96 billion, or just a little bit under 5 billion if we want to round it up. Now, this is just on the auto business. I didn't estimate anything for the energy business, as it is not as ramped up as the auto business, but judging by the increases that we have seen from Tesla in these sectors from other quarters, I ended up including 700 million in revenue and 900 million in energy services. This number could be slightly higher or it could be slightly lower, Maybe you can let me know in the comment section below what your estimates are. Now, what about the operation expenses, or OPEX? Where these ones are going to be very, very interesting, because we also know that Tesla has been increasing its R&D expenses tremendously, specifically for this quarter. Research and development for Tesla is the highest amongst any other auto company and pretty much any other growth company out there when it comes to their products today. But let's not forget that Elon also exercised his stock options, and that is also going to have an effect on the equation. Now, obviously, because this is an estimate, we still have no idea about the details about the research and development and how this was distributed. But one thing that I can assume is basically that aside from the ongoing development of the Cybertruck and the Tesla bot, the Tesla robot, the software and AI development for the artificial intelligence is bound to be the biggest expense to help Tesla with the new robotaxi prototype that Elon Musk spoke about at the Cyber Rodeo. And for that, I went ahead and included an $800 million for research and development and just about $1 billion for administration and selling expenses, giving us a grand total of about $1.8 billion. This would then give us an operations income at around $3.408 billion. Pretty significant if you ask me. However, considering taxes and additional interest, we could come with a net income of right around $3 billion flat, or just a little bit over. So $3 billion is the number of net income that I have come up with. It could be a little bit higher, it could be a little bit lower, but again, it's good to speculate. And that brings me to the most interesting and most important part about this estimation, and that is the EPS, or earnings per share, which we already know that last quarter it ended up being $2.05. But due to the higher revenue of this quarter, we could probably estimate anywhere between $2.60 and $2.63. And this is great news because this basically would mean a 28% higher compared to the previous quarter. This would also mean yet another record quarter for Tesla in the earnings report. But the second quarter could be another story due to the Shanghai lockdowns and also additional supply shortages. But that is going to be a story for another video. So for that, you're going to have to subscribe to the channel and stay tuned when I post that estimation. Now, I do want to say that this is already looking very promising for Tesla, and Wall Street may be very happy this time. The earnings per share is basically the bottom line for Wall Street, and it has profound effects when it comes to the 12 months price targets that they like to release. I know that a lot of Tesla investors don't necessarily pay attention to these short-term price targets, but it is very important to know that it is still significant and relevant to point out. Another great thing about this quarter is that it would be the last quarter in which earnings started hitting over $1 billion, having an impact on the PE ratio in a very significant way. I mean, just take a look at a year ago in Q1 2021, when Tesla had a net earnings after expenses and all that of $438 million compared to what I'm estimating of right around $3 billion. This would definitely result in a PE ratio dropping significantly from around 200 all the way down to 135 or even as low as 130. Pretty neat, right? So pretty significant growth in earnings, as you can see, coming up in its estimate of Q1 of 2022. And I'm very, very excited because this is literally the last quarter that we don't have Giga Texas or Giga Berlin. So the second quarter of 2022 is definitely going to be a very interesting one. But there you have it. What do you guys think about these numbers? I would love to read your comments and have a conversation with all of you about your opinions on these numbers. Do you tend to disagree with me on these estimates? Do you have more pessimistic or optimistic earnings than me? I'm very, very curious about your opinions. And before we go, I do want to say that if you found this video informative in any shape and form, consider subscribing to Electric Invest if you haven't done so already. I'll be posting more videos like this, as well as Tesla news and investing related news. I'm only asking for a subscription. I'm not asking for any type of Patreon money or nothing whatsoever. So it is very, very easy for you to do. And if you have already subscribed, welcome to the family of Electric Invest, and I'll see you guys on the next video.